A new banking policy could potentially delay or even freeze your Social Security payments, and this is something you need to understand immediately. If you currently receive Social Security, SSI, or SSDI benefits, pause for a moment and focus on this information. A significant banking change is being introduced quietly across the United States, and millions of older adults are unaware that it could directly affect when and how their money arrives in their accounts. We are talking about your essential monthly income, the funds you rely on for food, medicine, housing, and everyday expenses. This is not speculation or political chatter. It is a legitimate regulatory change that financial professionals are describing as one of the most impactful shifts affecting seniors' bank accounts in recent years. Could your payment arrive late? Is it possible your account might be restricted without prior notice? Could updated verification rules temporarily block access to your funds? These are critical concerns that every American over 60 should understand right now, not later. In this video, I will explain everything in clear, straightforward language. No complicated banking terminology, no confusing government phrases, just the key facts you need to safeguard your benefits and maintain peace of mind. Let's begin. To understand what's happening, we need to look at how things have worked up until now. For many years, the U.S. banking system has followed rules designed to protect consumers, especially seniors who depend on fixed incomes like Social Security, SSI, and SSDI. These safeguards were created after past financial crises, bank collapses, and situations where people lost access to their money through no fault of their own. While the system has never been flawless, it did include protections. For most benefit recipients, those protections ensured that monthly payments arrived consistently, were deposited safely, and could be used without complications. However, things have started to change. Over the past year, federal agencies such as the FDIC, the Consumer Financial Protection Bureau, and the Office of the Comptroller of the Currency have been holding discussions about banking regulations. These organizations oversee how banks operate, and their recent focus has been on how financial institutions manage government benefit deposits, verify accounts, and respond when accounts are flagged for review. Most people never hear about these policy discussions because they happen behind the scenes, but their impact eventually reaches everyday bank accounts. So what exactly is this new rule, and why should it matter to you? In simple terms, it involves stricter account verification and fraud prevention procedures. Banks have been under increasing pressure from the federal government to reduce fraud within benefit programs. Billions of dollars have been lost due to fraudulent claims, identity theft targeting seniors, and fake accounts set up to intercept payments. While addressing fraud is necessary, the way some banks are responding is creating unintended challenges for legitimate recipients who have been receiving benefits for years. Here is how it works in practice. If a bank detects what it considers unusual activity or receives a deposit that triggers its automated systems, it may place a temporary hold on the funds. Under new guidelines, banks may even be required to review the account and restrict access until the process is completed. For many people, this might seem like a minor issue, but for someone living on Social Security and relying on that money to pay rent at the start of the month, even a short delay of a few days can be extremely serious. It could mean missing rent, going without groceries, or being unable to purchase necessary medications. This is a significant concern, and it does not stop there. Another important part of this update involves expanded Know Your Customer requirements. Banks are already required to verify customer identities, but these rules are becoming stricter. Financial institutions must confirm that accounts are legitimate and used appropriately. For younger individuals who frequently update their details, use mobile apps, and respond quickly to messages, this process often goes unnoticed. However, for seniors who may not use smartphones, have limited internet access, or do not regularly check email, a verification request can easily be missed. That missed message can eventually lead to account restrictions. To better understand how this might play out, imagine a real-life situation. Picture a 74-year-old woman named Dorothy who has lived in the same apartment for many years and used the same bank account for decades. Each month, her Social Security payment arrives like clockwork, and she uses it for her bills, groceries, and medications. One day, her bank sends an email asking her to confirm her identity as part of a routine update. Because she rarely checks her email, she does not see it. A couple of weeks later, her account is placed under review. Her payment arrives, but she cannot access it while the bank completes its checks. When she visits the branch, she is told to provide identification and proof of address. Although the issue is eventually resolved, she misses a bill payment and goes several days without access to her funds. Situations like this are already happening to people across the country. You might be wondering whether federal law protects Social Security deposits from being frozen. The answer is yes, but with important limitations. There are protections in place that prevent certain funds from being taken in cases of garnishment, which is when someone tries to collect a debt through your bank account. In those situations, banks must protect a portion of federal benefit payments. However, this protection applies specifically to debt collection scenarios. It does not stop a bank from placing a hold on your account for verification or compliance reasons. These are treated as separate issues under the law, and this distinction is extremely important. If someone tries to take your Social Security money for a debt, the law generally protects you. But if the bank flags your account for review or suspects fraud, it can legally restrict access while investigating. Knowing the difference can help you respond appropriately if this happens. SSI recipients face additional concerns. Because SSI is based on financial need, recipients often have limited income and resources. Their monthly payments are typically smaller, and they are among the most financially vulnerable individuals. Even a short delay in accessing funds can create serious hardship. At the same time, SSI recipients may face more challenges during verification because they might not have extensive credit histories or consistent documentation. SSDI recipients also encounter unique difficulties. Many are dealing with health conditions that make it harder to respond quickly, travel to a bank, or handle complex processes. Some may have mobility limitations, cognitive challenges, or mental health conditions that make these requirements especially burdensome. Unfortunately, fraud prevention systems do not always take these realities into account. So what can you do to protect yourself? First, make sure your contact information is up to date with your bank. This includes your phone number, mailing address, and email if you use one. Many banks send important notices electronically, and if your details are outdated, you might miss critical alerts. Second, take time to understand your bank's policies regarding direct deposits. Ask what might trigger a review, how long it could last, and what steps are required to resolve it. Write down this information so you are prepared. Third, consider keeping a small emergency fund separate from your main account if possible. Even a modest amount can help cover essential expenses during a temporary hold. Fourth, keep important phone numbers easily accessible, including your bank and the Social Security Administration, so you can act quickly if needed. Finally, consider adding a trusted person as an authorized contact on your account to assist if you are unable to manage an issue yourself. Some people have considered switching banks in response to these changes. While that is an option, it requires careful planning. Updating your direct deposit information takes time, and you must keep your old account open until the transition is complete. Credit unions may be worth exploring as they often provide more personalized service, but they are still subject to many of the same regulations. It is also important to stay alert for scams. Fraudsters often take advantage of confusion, pretending to be from banks or government agencies. They may claim your account is at risk and ask for personal information. Remember, legitimate institutions will not call you unexpectedly and request sensitive details over the phone. If you receive such a call, hang up and contact your bank directly using a trusted number. As we wrap up, the key takeaway is this. While banking rules are evolving, you are not without options. Staying informed, keeping your information updated, and understanding your rights can make a significant difference. These changes may seem complex, but with the right knowledge, you can protect your benefits and maintain control over your financial situation. Stay aware, stay prepared, and take steps now to ensure your security moving forward.